Welcome to another video. Today I will be sharing with you a multi-time frame analysis on a pair. So we will be taking a pair, making a multi-time frame analysis on it, checking the order flow, and I will try to keep the analysis as educational as possible as usual so that you guys can understand what you're supposed to be looking at when you are analyzing the market and searching for opportunities to be capitalizing on it. So as usual, I suggest that you watch the video until the end because it will be filled with value. And if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms each and every day. So I suggest you subscribe and I will see you in the video. Okay, so today I want to speak about Euro PLN. Now, why exactly Euro PLN? Because from an analysis perspective, it's very good to be looking at it because the analysis will be very educational, as you will now see, and there is the opportunity to be looking in the near future for some good opportunities to be capitalizing on this pair. So I want to speak about it. Now let's start from the weekly time frame. What kind of situation we have? Now, from a weekly perspective, we have a market that has created an overextended W formation. Now, after an overextended W formation in the market, what do you expect? You expect the market to make a retracement to the downside. And anyway, if you have a market that creates a very nice impulsive phase to the upside, you want to see the market make at least the start of a retracement to the downside. So make a nice retracement at least to the 0.382 Fibonacci taken on the impulse. So from the low to the high of the impulse, you want to see the market retrace at least to the 0.382. So what did we say on what did I say on TradingView? I said when the market was around this area, I told all of you expect the market to start a nice move to the downside to go and test at least the 0.382 of the Fibonacci taken from the low to the high of this impulse. And in fact, the market has now reached the 0.382 and we were able with students to capitalize on this move to the downside for a very nice 1 to 3.5 risk to reward to the downside. So a very good trade. And now it's time to be looking for the next possible opportunities to be capitalizing on this pair. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to analyze or explain in the next videos. So let's start our analysis from the weekly time frame. Now on the weekly, what situation we have? We have a market that has created a very nice M formation. Now, if you have an impulse and the market retraces, creating an M formation, you definitely want to see the market make a move to the upside to go and complete this M formation, okay? That is exactly what you expect from a market like this, to see it go and retest the M. So the previous support to resistance, the nearest supply zone before the continuation lower. So from a weekly perspective, we already have an overall upside target in mind. If we go and see what is the situation from a COT perspective, so the commitment of traders, what big hedge funds and speculators in the market are doing. If we go and see what they are doing from a euro perspective, what we can see? We can see that overall the net positions went from minus 114k all the way up to 72k net positions. So from having shorts outweighing longs to having longs outweighing shorts with a 30.7% long exposure at the moment and 17.4% short exposure from an institutional perspective on the euro. Now with the last report, we can see that obviously, yes, they added some shorts and they closed some longs. And in fact, we have seen the move to the downside. But in general, we can expect still some euro bullishness. So some euro strength. So from the weekly, we already know that we want to see the market overall hit this upside target. We go down on the daily time frame. And what do we see on the daily? On the daily, we see a very similar target in mind, which is obviously exactly the same one, is the same structure that you see from the weekly. This very strong support area, there was support here, support, all the support is term resistance here, and we're supposed to see the market go and test it before creating continuation to the downside. Now, at the moment, from a 4-hour perspective, can we be looking for any longing opportunity? Obviously not. Trading is reactive, is not predictive. You need to have a clear set of rules that you're following, and longing a completely bearish market is obviously not part of our rule-based strategies. So we don't know when the market will start to move to the upside. We can't predict the market, but we can react to what the market will show us. So how we will be approaching this pair with the students. At some point, you will start to see the market make a deceleration. So you will start seeing from a 4-hour perspective, the market shifting from a bearish market to a bullish market. That is what you have to be waiting for, and what we will be waiting for with students. We will be waiting for the market no matter where, because keep in mind, if the market melts lower, it's even better because we will get a better risk to reward to the upside when the pullback and completion of the pattern will come. So we will be monitoring price action and waiting for a clear accumulation phase, so a deceleration, a shift from a bearish market to a bullish market from a 4-hour perspective, and then we will be waiting for the market to provide to us one of our valid entries. It's very, very important to always wait for the market to satisfy all your rules for entry, and your rules for entry need to be tested. Ours are obviously tested, part of the strategies, but if you don't have clear rules for entry that are both back tested and live tested, you need to develop them. And then as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and good probabilities for the move to the upside and completion of the pattern. Then when the market will make it to this previous support term resistance, how we will be approaching again this pair. Simply at that point, we will have an impulse correction pattern, and you expect the next impulse to the downside, because overall you would like to see the market go and test this structure here. But in general, after an impulse and a correction, you expect continuation to the downside. What we will also have inside of this area will be the confluence of the Fibonacci taken from the high to the low of the impulse that the market will create. So let's say the market shifts from here and starts the retracement, we will take a Fibonacci from the high to the low, and it would be great to have the confluence, for example, of the 0.618 lining up with this previous support, now term resistance, because at that point you would have a confluence of resistance. So the 0.618 and the structure support term resistance, which is also the completion zone of the weekly information that we can see. So at that point, again, we will be approaching this in the exact same way, waiting from a 4-hour perspective to the market, for the market to shift from a bullish market in this case to a bearish market, and then we will be waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking another short with a very good risk to reward and good probabilities for another move to the downside, because in the end, it's all a game of probabilities and risk to reward. Obviously, we will also have new COT data that we can work with. We will have the new reports coming out, and it would be great to see hedge funds during the move to the upside add new shorts from a euro perspective. And if during this move to the upside, hedge funds will be adding more shorts, then this will again be a very high probability trade to the downside. So this is overall what we have on a Euro PLN perspective. We close a nice 1 to 3.5 risk to reward to the downside, looking for capitalizing opportunities again on this pair according to the rules of our strategies. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis on all these platforms, as well as going and checking out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit. So I suggest that you click the link and you go and check it out, or you can go and check out the next video.